Why do experts only trade the third wave? Let us reveal the core secrets of wave trading. Welcome to Inventor Strategy Selection Channel, where we focus on finding trading strategies with real practical value. When applying wave theory, most traders try to capture complete wave structures. However, complete does not mean perfect. The first wave is often full of uncertainty, making it hard to distinguish real breakouts from fake ones. The final wave might look tempting, but risks pile up quickly at that point. One wrong move can turn profits into losses. True trading masters understand one principle. Instead of chasing perfect wave structures, focus on the most certain wave. As one private fund manager puts it, trade 3 waves out of 5. Today's strategy turns this concept into an executable quantitative system. It abandons the greedy pursuit of complete wave structures and specifically targets the most reliable third wave segment. This approach avoids early uncertainty while fully capturing the core gains from the main uptrend. To understand this strategy's brilliance, you first need to grasp the core points of wave analysis. In wave structures, higher lows represent bull market confirmation, showing that each pullback finds support at higher levels, with buying power dominating. Lower highs represent bear market formation, showing that each bounce fails to break previous highs, with selling pressure continuing. This strategy transforms complex wave identification into precise counting mechanics. By tracking the frequency of lower highs and higher lows, it only triggers trading signals after accumulating exactly 3 occurrences. Combined with engulfing pattern recognition, volume confirmation, trend verification, time filtering, and dynamic stop losses, it forms a complete multi-confirmation trading system. The entire system specifically waits for third wave launch timing, striking precisely at key moments. Parameter settings directly determine the strategy's ability to adapt to different market environments. First, we set the trend moving average length, which controls trend identification sensitivity. The default 50 periods balances sensitivity with stability. Next is the volume moving average length, which affects volume confirmation strictness. For liquid mainstream coins, you can set longer periods. The high-low detection look-back period is the strategy's core controller. It determines wave turning point identification accuracy. Too short creates too many noise signals. Too long might miss key turning moments. The risk-reward ratio sets profit-loss ratios for each trade, directly affecting long-term profitability. Maximum candle size, pip value, and risk per trade form a complete money management system. The large candle threshold specifically controls risk exposure during extreme market conditions. Finally, moving average slope look-back period and minimum slope threshold work together to quantify trend strength, directly affecting trading frequency and signal quality. These parameters need flexible adjustment based on different coins and risk preferences. This code section establishes quantitative standards for wave identification. Moving average slope calculation solves subjective trend judgment issues. It uses numerical slope to determine if the market is in an effective impulse wave. Only when slope exceeds the minimum threshold do we consider the trend strong enough for trading. High-low point detection logic identifies genuine reversal signals by comparing current bar's high-low points with historical extremes over the specified look-back period. This historical range comparison method effectively filters short-term price noise in the market. It ensures the system focuses on structurally significant turning points, improving wave identification accuracy and reliability. The counter mechanism is the strategy's soul. It transforms traditional wave analysis that relies on experience into objective mathematical calculation. When price creates lower highs, the system does not react immediately. Instead, it quietly accumulates lower high counts while resetting the higher low counter to 0. Similarly, when price creates higher lows, the system accumulates higher low counts while resetting the lower high counter. Strict engulfing pattern identification ensures only the strongest reversal signals pass screening. These patterns often appear at important wave turning points with strong predictive value. Volume confirmation combines price analysis with money flow analysis, ensuring each signal has sufficient market participation support. This is called price-volume coordination in wave theory. Time filtering sets specific trading sessions, avoiding periods with insufficient liquidity to ensure execution quality and cost control. This section implements the strategy's core logic. First, candle size analysis provides risk control by calculating raw candle size. When size exceeds the large candle threshold, it uses half candle size to reduce stop-loss distance while verifying candle size does not exceed maximum limits to ensure controllable risk. Signal condition design uses strict multiple confirmation mechanisms. Time confirmation ensures market activity. Trend confirmation ensures correct wave direction. Count confirmation cleverly solves timing selection and wave trading through equality judgment, ensuring trading signals only trigger after the market confirms through 3 attempts. This mechanism perfectly corresponds to third wave launch conditions in wave theory. Pattern confirmation ensures sufficient reversal momentum. Volume confirmation ensures money support. Size confirmation ensures controllable risk. This multidimensional verification system greatly improves signal reliability, avoiding misjudgments that single indicators might cause. Dynamic position size calculation achieves fixed risk exposure money management goals. It divides risk amount by the product of stop-loss size and pip value to determine appropriate trade quantity. No matter how much the market fluctuates, each trade's potential loss stays within preset ranges. This risk-first mindset is an important characteristic of professional trading. Stop-loss and take-profit settings reflect strategy flexibility. Sell size adjusts dynamically based on actual candle size. A ratio ensures higher risk-reward ratios, controlling risk while optimizing profit space. Execution logic reflects the important values of discipline and completeness in wave trading. When all confirmation conditions are simultaneously met, the strategy opens positions without hesitation. This decisive execution avoids common hesitation problems in traditional manual wave analysis. Opening positions immediately sets stop-loss and take-profit orders, ensuring each trade has clear risk boundaries and profit targets. This preset mechanism effectively avoids emotional decision interference. Timely counter resets are key to the entire wave identification system. When signals trigger, the system immediately resets corresponding counters to zero, preparing for the next wave count cycle. This design ensures independence and uniqueness of each trading signal, avoiding signal overlap and confusion while maintaining clarity in each trading cycle. Essentially, this strategy captures main wave explosions after momentum accumulation, rather than strictly following wave theory. Through triple confirmation mechanisms, it waits for markets to build sufficient power. When bull-bear forces reach critical balance points, it enters precisely to enjoy rapid gains from momentum release. In practical applications, this strategy shows obvious performance differences across market environments. During trending phases, mainstream coins like BTC and ETH usually display relatively clear wave characteristics. The strategy's triple confirmation mechanism effectively identifies third wave launch timing after adjustment endings, when technical patterns and market sentiment create positive resonance. Sideways consolidation markets are natural enemies of all trend-following strategies. Markets lacking clear direction not only produce few signals but easily create false breakouts. Traders need sufficient patience to wait for genuine trend establishment. For advanced applications, you can combine multiple timeframe analysis to determine more precise entry timing. Also, by observing fear-greed indices and money flow indicators, you can better judge third wave potential extension space and strength. From quantitative trading system evaluation standards, this strategy shows distinct characteristics across multiple dimensions. Strategy completeness scores highly, mainly reflected in successfully transforming abstract wave theory into concrete algorithmic implementation. Precise counting mechanisms and mutually exclusive counter logic enhance system stability, though there is room for improvement in exception handling. For risk management, dynamic position calculation and adaptive stop-loss mechanisms are well designed. Precise signal trigger conditions further enhance risk control capabilities. Adaptability scores above average through more precise wave statistical logic, performing more stably in specific market environments, but still requires users to have some market judgment ability. Understandability is quite friendly for users with technical analysis backgrounds. Code structure is clear, and simplified counting logic is easier to understand. Innovation is the biggest highlight. Intelligent main wave confirmation mechanisms provide more reliable objective implementation paths for subjective wave analysis. Practicality performs well under suitable conditions, with optimized signal mechanisms, reducing false signal generation. It is important to understand that wave theory is essentially an empirical summary of historical price movements, not absolute market truth. Market complexity far exceeds any single theoretical framework. Wave analysis provides more of a perspective for observing markets rather than precise prediction tools. Worth considering, do classic analysis methods still apply to today's rapidly changing market environments? How should these theories evolve and optimize under new market structures? Interested friends can try more strategy testing and verification on inventor trading platforms, exploring optimal combinations of traditional theories with modern cryptocurrency markets.